Hello students. Today in this video we are going to see the preparation of common size balance sheet. So hope you have watched the previous videos of mine where we have discussed the comparative income statement and the balance sheet. So this is yet another tool for financial statement analysis. This is also an important tool which will help the business organizations to make good decisions. So, what is a common size balance sheet? From the very term itself, you got to know or you get an idea regarding the fact that you are going to convert all the items given in the balance sheet into a common size. So, when the various items are converted into a common size, a common unit, you get to know better about it. You can easily compare the items and arrive at meaningful interpretations. Okay, so a common size balance sheet uses the total assets value as the base value. So we know that in the case of a balance sheet, the assets and liabilities are equal. Both this will be equal. Only then we'll say that a balance sheet tallies. So you can take the total asset value or the total liabilities value. Total liabilities value means the equity as well as the external liabilities. The total value, the total liabilities value in the balance sheet. So that tends to be the same. No, that will be the same unless there is some errors in the trial balance. This balance sheet will tally. So any value you can take. So let it be for convenience. We'll in the following and the lecture following, I'll be saying that we'll be basing the calculation on the total assets value. But you have to keep in mind that it is equal to the total liabilities value also. Okay. So each line item of the balance sheet. So we know about the various line items of the balance sheet. So each item given in the balance sheet will be expressed as a percentage of the total assets. So it becomes convenient for comparison. And how will you find out the percentage of the line item? That will be equal to each individual line item divided by total assets into 100. So that's quite simple. That is each line item divided by the total value of assets, the total of the balance sheet into 100. That will be the, that is how you find out the percentage of the line item to the total. Now, this is a format of common size balance sheet. Actually, the calculation is easy. Let us familiarize with the format of this. That is common size balance sheet as on that particular date you will give. Particulars column you have, note number. You don't have to write anything because we are dealing with problems from the textbooks. Only in practical situations you will have note number. And now the absolute amounts, what is given in the question, the current year and the previous year. So in this in this type of common size balance sheets, you can compare any number of balance sheets because all will be dependent upon that particular year's total only. So any number of years you can take here. And percentage of balance sheet items to the total. That is what we'll calculate. So all these will be provided in the question, that is current year, previous year figures will be given in the question, and we'll be finding out only the percentage of the balance sheet items to the total. So this we have to calculate. So how will we calculate that? So I'll tell you only one item we'll discuss here, like share capital. Share capital, the current year's value will be given, no? So the current year's value, in the formula we have seen that it's the current year's value or the that particular line item divided by total. See, this is the total. This total and this total will be the same, no? This is the total of assets and this is the total of liabilities. It will be the same. So each line item, so the amount given in the given against share capital for this particular year divided by the grand total into 100 will give you the percentage here. So here you will be getting a series of percentages. And for the previous year, if you want to calculate, that will be this particular item, share capital of the previous year, divided by total of the current assets. So here, inter-year comparisons are not made. That is, calculations are purely based corresponding to, or within that using the figures given in that particular year only you will be making the calculations. You don't have to interrelate with the previous year or current year, whatever. So only that particular years, suppose if you want to find out the percentage of the balance sheet items over here for the previous year, you'll be taking the previous year value of share capital here divided by total value of the same year into 100. So don't make mistake, don't refer, that is when you may get confused with the comparative balance sheet where you will be comparing on the previous year's figure. That is all the calculations will be based on the previous year's figure, but here only the corresponding item and the total of the assets you will be considering. And in that course you will find out that the total here will be equal to 100, and here also it will be equal to 100, and these two will be equal to 100. So you will be getting series of percentages. Because why you are getting 100 here? Because this 100 is based on this total, and this is based on this total. So you are finding each line item as a percentage of the total asset of that particular year. So that means this will be 100. No, the total of that will be 100 only. So likewise, you will get in the case of liabilities also. And the only difficult thing here is that you will have to learn the format. But most of you might have learned the corporate accounting, in corporate accounting or accounting of companies, the format of balance sheet is given. So most of you will be knowing that. So this order you will have to learn. Surely it should be prepared in the vertical format only. Equity and liabilities first, under that shareholders funds and shareholders funds, share capital reserves and surplus, then non-current liabilities, current liabilities, likewise you will have to go. So the format is very important. Even if in the question it is given in some other order, you will have to arrange it in the vertical format and then calculate it. So things are simple. So that is how you do it. Okay. And now we are going to see that is how this can be done in Excel. Let us see how this can be done in Excel. For your that is for your learning, what you can do is you can do it in the notebook. Okay. So here share capital, the value is given here, and let us see how this is calculated. I told you it will be the particular line item amount, that is 5 lakhs, divided by what is the total given here. Let us see what is the total given here. That is 7 lakhs 30. Okay, it's 7 lakhs 30 is the total of the assets into 100. That will give you that common size figure. That is 68%. And now this 15, for this 15 lakhs, what will you do? That is 15 lakhs divided by the total of that particular year. Total of 2019 into 100 will give you the percentage or the common size for 2019. So what you can see here is you are expressing each line item as a percentage of the total assets. So here the total will come to 100. So please note that there are subtotals over here. So when you are adding it up, either you will have to add up the subtotals or the line items. Otherwise, there will be duplication. Okay, because 68 plus 14, it is 82. So you cannot add 68, 14 and 82 because these two totals to 82. So if you are taking line items, take only the line items and see whether it is coming to 100. If you are taking the subtotals, take only the subtotals and see whether it is coming to 100. That's how the accuracy is checked. So it should come to 100. Similarly, you will do it for the next year also. And for liabilities also, it's the same. That is 3 lakhs divided by what is the total? 7 lakhs 30, or this both is the same, no? Into 100. And for this 9 lakhs divided by 21 lakhs 45,000 into 100. And you'll do it do the same for liabilities also. So this is how you do you prepare the common size balance sheet. Okay, the common size balance sheet is prepared like this. That is you will find out the percentage of each item. So what is the advantage of this? What advantage do you see in the case of common size statements? Like if it is given just as absolute figures, you don't know. See, it is 5 lakhs here, it is 15 lakhs here. So by merely looking at the absolute figures, you cannot arrive at conclusions. Okay. But what you do here is, you are converting that as a percentage of the total assets. So it is 68%. So what conclusion can you draw from there? That is, the share capital is 68% of the total liabilities of the company. So that is 68%, and in the second year it is 69, around 70%. So they might have issued share capital. So it is 69, 70%, around 7, almost 70%. And now you can look at the debts also, long-term borrowings. So that is the component of debt, no? 7% only. In the second year, it increased to 11.66. So by looking at each year's figures, you can easily comment. That is, this is a very good company because 68% is share capital, 14 is reserves and surplus. So their funds, long-term funds is 82%. 82% comprise of share capital and reserves alone. Borrowings is just 7%. So a very good company, the very less use of debt in the capital structure. So that is how you comment on the performance of the companies or whatever based on common size statements. So this is the greatest utility of common size statements. So unlike comparative statements, this is a bit different. That is, you can find out any number of years' common size statements using the given information. Hope you had a great time. Thanks for your patient listening. Have a good day. Thank you so much.